So again, and by the way, that's not supposed to be like, oh, these are supposed to either work or they're not. Everything has a percentage chance of working. It has a probability. So look, subjected to very rigorous testing. The way I know Adam uses them, and I know guys in the investing campus, investing masters, because someone laughed at me yesterday because I called them Adam's guys, but the investing masters use liquidation maps. That's fine, especially if you have a process, a system built for it, and if you're using it in a different context. Because those guys are not going to be like trying to trade every false breakout. If you're actually trying to actively trade, you need to really rely on your data to be accurate, first of all, which liquidity heat maps are not. But what they are good for is a general rough guide, because basically it just takes a price level, a change of open interest, and applies a multiplier to it, which is hilariously terrible. But again, I'll explain that when I do it fully. So they're okay. I don't think they're great. The more you trade, the more frequent you trade, the more active you are, the less useful they are. Make sense? And everything looks great in hindsight. Same as order books. Everyone sees the Trading Light order book, you know, the heat map with the little orange squares, and you always see the time where it absolutely ping-pongs perfectly off it. Yeah, except sampling bias, right? You're choosing the one that worked. Jonesy Bones GM. Maybe a stupid question. There's no such thing. But do you expect to see a high number of false breakouts over the next few months? That's a stupid question. No, I'm joking. Yes. Very good question. I actually do. And the reason being is we're only at 63k, and already we're like, we're so back. So yeah, I think every significant level that gets hit will have some kind of false breakout. I would assume. So meaning, you know, let's just take it daily. And this is obviously all assuming that we go up, which we may or may not, but let's assume we do go up. You know, I would expect this level to attract some longs, and then we flush back. And assuming we go higher, this level will attract some longs and flush back. And assuming we go higher, all-time high will attract some longs and it will flush back. I think that's going to be the way until, and this is important, until people start to expect every breakout to be a false breakout, and then it'll behave differently. But I've traded for 7 years. However long you guys have traded for, I can guarantee you, there's one thing. There's death, taxes, the three certainties in life. Death, taxes, and somebody will buy the fucking breakout. Just always. So the odds of false breakout is just always there. There is just, because there's always somebody buying it. People might get slightly smarter over time, but every time it goes above a key high or below a key low, there's just always something that's like, I fucking need the short here. I need the long here. Because what if it never comes back? It's that what if. What if it never, ever, ever comes back? And they just self-fulfill the same thing and they create them. So what I do think, and this is why this workshop is super relevant, because I think along the way here, let me be like more clear with this, with the exact levels. This 65, then the next significant level, which is this 70 level, and then the all-time high. I would not be surprised, and I fully expect to see false breakouts on each of them, but they may look different. You might get a single candle wick here, and price chops around and then blasts through it as people short the wrong breakout, right? Or short the wrong false breakout. And then you might get a proper breakout, and it might come back down and consolidate and then move up. So what would that be? That would be your wick, right? Wick, false breakout. And then it goes up above, candle closes above it. So people get short here, get stopped out, people go long, flushes back down, forms a higher low, comes back up, straight up, and then up to this one, and then something similar. Maybe you have a wick above that one, comes back down, you blast through this one, candle closes, you come back down. Prepare for chop. This is the first time ever that we've had this is the first time ever in my crypto trading experience, not that I've got much experience trading anything else, I mostly trade crypto, but I've never known a time where there was just such universal consensus that we're in a bull market, don't worry, and that Bitcoin's great. It might not seem like it if you haven't traded through 2017, 2018, 19, 20, 20. There were so many disbelievers back then. Even in 2021, when Bitcoin was at 64k, there was still people who were disbelievers. Now, there were fewer. Most people were in euphoria. But when it crashed down again, they're like, you see, all right. And then when it went up, they're like, this isn't going to happen. This is going to fail. This is going to fail. This is going to fail. I just don't see anybody. Maybe I'm definitely not in an echo chamber because I'm looking at both sides. I search actively for bearish posts. I search actively for bullish posts. I just don't see anybody who is anyone credible, like anybody in even remotely half serious, that says that Bitcoin is going to zero, it's a scam, it's over, it's all dead. Most people, those perma bears have been going to say something rude there. Those perma bears have been violated so many times by bulls that they're dead. But philosophically, a perma bear never dies. They always live on. They just move on to something else. So what they've done is they've moved on to everything else is a scam. So Ethereum, Solana, fucking go down the risk curve. They're all scams. They're all going to zero. But there's just such universal acceptance that Bitcoin it's here to stay. Now, there's different arguments about price. Some people think it's going to go lower. Some people think it's going to go higher. Some people think fucking 250k. Some people think 100k. Some people think double top. Some people think we go to 40k first. But the narrative about Bitcoin being dead or a scam or a waste of time, a waste of money, it's gone. And just look at BlackRock, right? Biggest asset manager in the world, launched ETF. Nobody can say it. No one can seriously. If you seriously try and say Bitcoin is stupid or dead or dumb, you are an idiot. You're literally going against the biggest institutions in the world who are out shilling it. That doesn't mean we go. So the problem with this is, right? So what does that lead to? And this loop this back around to what Jonesy asked. What that leads to is this universal acceptance that Bitcoin's great and it must go higher and there can't be any fuckery, as if JP Morgan and BlackRock wouldn't engage in any market fuckery. Yeah, good luck. I mean, if you believe that, Lord, please, study financial history. Just Google JP Morgan gold fine and you'll understand what their game is. So there's going to be way more fuckery because you're going to have bigger players who are more prone to fuckery, and you're going to have more attempts to break out, and they're more likely to fail because there's just consensus that we're going up, even at 63. So by the time we get to 73, people are going to be fucking Googling Lambos and third houses in Miami and shit. It's just, yeah, people are going to get really, really, really far ahead of themselves. Yeah. So, anyway. Can you make a weekend workshop on divergence and price action patterns? Divergences will definitely be one, yes. Divergences of all types. I'll actually have I'm going to do that one in a couple of weeks, and I've got a secret surprise as well on that one. So yeah, the divergence one will be a banger. Mihailo, GM, for false breakouts, for example, I'm in up trade and got the false breakout and the market structure break confirmed for trend reverse, but after that price just go on the same way up. My question is how to avoid that. It just happens. So you got the false breakout and a market structure break. To be honest, bro, there's nothing you can do. That's just a losing trade. Because if you just got in when it was a false breakout, my next advice would be wait for a structure break. Otherwise, you might be going into one of those false breakouts that's a false one. But if you have a false breakout and a market structure break in the opposite direction, I mean, what more can you ask for? If that loses, it just loses. So it's a good point, though, because it's just natural. I talk about this all the time. There's a tendency to want to always avoid just every potential loss you could ever have must be avoidable. A certain number of losses are just not avoidable. For you to run a system, you have to accept that some of them are going to fail. Otherwise, you can't get the winners. This is like so important. So if I told you a way to avoid those false breakouts, it means you have to change your rules, right? You have to add a rule, which might mean you also miss winners. You understand? If you take every false breakout with a market structure break, I guarantee every single one of you, if you go and test false breakouts after this, if you test a false breakout just by itself, just the candle wick, and then you test a false breakout with a market structure break, so like a double confirmation, I guarantee you the second one performs better, gives you more confirmation, right? And also, I also guarantee you that the second one is still going to have losers, but if you change anything about the second one, it's also going to take away your winners. So imagine the false breakout system with a market structure break. Imagine that one had 70% win rate, and you're too focused on the 30% of losers, and you try and optimize to not have the losers, and it ends up making you miss some of the winners. That's where you can negatively affect your own system. So by all means, keep testing and trying things, but don't forget, it's not about getting to 0 losses, 100% win rate. It's about expected value. System based on 2 trend lines, objective rules can be tested. I'm developing a system based on 2 trend lines, objective rules can be tested. What are the objective rules? You haven't told me. That's not objective. It's just, you have to tell me what they are, bro. Nothing objective about that because you haven't explained it. It's just 2 trend lines. Money Matt, can false breakouts also be described as liquidity sweeps? Totally. Semantics, bro. Call it anything you want. Call it a super mega Dr. Michael G. PhD level if you want. Idea for entry and validation based on something I'm actually testing now using the lesson multi-time frame workshop. Find a lower time frame breakout structure in the opposing direction to the breakout to confirm a false breakout and enter a lower time frame BOS. Good stuff. No comment on that because I don't know the system, obviously. Tested. That's always the answer there. But the logic's good. Cope G, key data. Yep. That'll be... as I was doing this, I decided that using data to support false breakouts is going to have to be a whole other weekend workshop. So that'll be another one. What that means is, if you're looking at price moving above a high or below a low, can you identify changes in spot pressure of buying, futures buying pressure, open interest, deltas, maybe order flow, stuff like that, to inform whether a false breakout is more likely to occur or not and get a better entry? Yes, that is possible. You can do it. It will be on another weekend workshop later on. GM. Because that one will be a whole hour by itself. But if you don't have the context of this one, the other one is no good, right? You need to understand the core first before you understand the additional stuff. Recent problem with false breakouts, few, is that they turn out to be actual breakouts after a false breakout, then they flip back to false breakouts and keep reversing, which I'm patient and trade as per my systems, losing is more likely. When I'm patient, sorry. And then, of course, when not trading them, they move to where the take profit be. Selection bias. You're selectively choosing the ones that you miss, and your brain emphasizes the ones you miss that actually win, and it forgets or doesn't even see the ones you miss that lose. It's also anyway, should I go into a rant about it? Maybe. Yeah. Sorry, I got text. So, this is a little bit like patterns, chart patterns. There's a condition that we're all subject to called apophenia. I've talked about it before. Apophenia. Which is your brain's tendency to see patterns in things. We're designed to see patterns. If we didn't recognize patterns, we get eaten by the lion. You all know the fucking biological cause of it, right? That also causes you to see things that aren't there, and it's very prevalent if you're looking at chart patterns. Your brain is so good at spotting the bull flag that breaks out bullish, and it will, and again, you think this won't happen. It fucking does. Your brain will literally miss bull flags that don't break out, that break down. Patterns that don't behave how they should behave, your brain will literally just not see them. This is also true of trend lines. Because when you open a chart, and again, not to rag on trend lines, but I'm going to fucking rag on trend lines. I genuinely don't have a problem with trend lines if you can make them objective. And I know the student mentioned one there. I'd like to see it. Again, the problem is apophenia. When you open up a chart, you can only draw the trend lines you see, right? So you would have to look at this and say, well, where's the trend line? First problem, you're looking for a trend line. So that has you looking like this, right there. That's possibly a trend line. Cool. But what if we go back? Okay, let's go on ahead. Then, was this not a trend line as well? From here? Was this not just a steep trend line to there? Was this not one? The problem is you're looking at past data and not realizing that every candle that forms brings new data, and the trend lines always change because the chart always changes. And when the new stuff comes, the old stuff just gets washed away. Like this trend line here, right? That trend line there, if you weren't actively really disciplined about looking for it, that trend line there would never even figure in your imagination. Because what comes after it distracts you. And you're looking at like trend lines, you know, over here. Just the point is, you can draw literally infinite trend lines. Anyway, are there things you would use other than the confirm market structure break MSB to know how likely a false breakout or not is without adding too much complexity? Data, which I'll do in a later weekend workshop, and just try things, bro. Again, like I said, I gave examples today to kind of stoke your curiosity. Try other things. Would the preemptive entries be market orders ideally? They would have to be, yes. You mentioned the stop market order. Assume these trigger when price actually crosses it. Yes. It's a conditional order. And like a limit order would trigger already in price in the red zone and positional. Yeah. Market order, yeah. I mean, if you wanted to, you could wait for it to cross the level and limit chase into it. Kind of defeats the purpose because you might end up getting a worse entry, not at the exact level. If the idea is that you're trying to get a better entry, you're not trying to optimize fees here, because you're trying to get a tighter entry, that means you have to get in at a certain price. Otherwise, you know, like you're trying to catch this optimal entry, preemptive entry here, right? So you're trying to put your order to enter there. That's how it's going to work, because your stop loss is going to go there and your target is going to be your entries there. If you use a limit order instead and try and get in and be too cute with it and chase it, well, what if you end up getting filled there? Well, then that's not where you wanted to get filled. Then it's slightly closer, but it's slightly worse. You might as well, you know, so you're either getting in or you're not. Andy World, that's not a question that's relevant to weekend workshop. Omar, any comment? That's not relevant to weekend workshop. TPU, what's the difference between a liquidity sweep, double top, and a false breakout? Well, a double top doesn't have to have a sweep. So a double top and a double bottom is generally comes to the same price level, right? So the double top or double bottom will come to the same level. A sweep and a false breakout are pretty much the same. Yeah, that's totally fine. It moves up into a level, goes above it, fails it back below it. Yeah, false breakout. Again, semantics. Call it anything you want. That's G. All right. GM. G fucking M. Thanks for joining, everybody. Hope you enjoyed this weekend's workshop. False breakouts. It will be up for 24 hours and then gone. Thank you all for joining. Great questions. GM. Talk soon.